Good evening, everybody. I'm Bill Griffith in again tonight for Tyler Matheson.
And I'm Susie Garrow. Well, with the U.S. and much of the rest of the globe in the grips of World Cup fever, we begin tonight with a look at the company that's outfitting the U.S. soccer team, Dow component Nike. After the market closed today, the giant sneaker and apparel company posted quarterly earnings that jumped 5% and 3 cents per share more than analyst estimates. Revenues also came in better than expected, and that's thanks to strong demand in the U.S. and several international markets. And news that worldwide orders were up 12% lifted Nike shares in after-hours trading. Sarah Eisen has more on what's next for Nike.
For Nike investors, there are 3 areas to watch right now: big sporting events like the World Cup, China, and technology. Nike shares have fallen almost 3% this year, making them one of the losers on the Dow in an up year. So what are investors looking for to turn it around? A payoff in soccer sales. Nike is spending big on World Cup marketing.
The World Cup is always a big boost in sales, both in terms of performance product and also sportswear or lifestyle product. We're seeing our football category continue to grow. We are the #1 football company in the world. Our market share in footwear is tops in almost every country around the world. And we feel that with the innovation that we're introducing around this World Cup, that's only going to get stronger and stronger.
This year, Nike is sponsoring 10 teams in the World Cup, including marketable teams like the U.S. and Brazil. Soccer, though less than 10% of total Nike sales, is growing fast, thanks in part to growing interest in soccer in the United States. But for Nike, it's not just about its home market. Investors are also paying close attention to Nike footwear and apparel sales in China. Unlike fast-growing competitors like Under Armour, Nike actually gets most of its sales outside the United States. And China is the key growth market. Nike has struggled there because of local competition, merchandising issues, and a weaker economy, but recently has been addressing the challenges, and investors are looking for proof of a solid turnaround. The other area of interest is technology. Nike has reportedly been scaling back its FuelBand wristband to focus instead on apps and software for tracking fitness. There's still a big mystery as to what Nike has planned for the brand and in wearable technology. Even though Nike shares have been under pressure, Sterne Agee analyst Sam Poser says the tide is set to turn because of what he calls an exceptionally good product pipeline, including some upcoming sneaker releases next year. There's also word that viewer ratings and sales have been strong in Brazil for the World Cup. Adidas this week saying it expects record soccer sales for 2014. Now, Adidas and Nike control about 70% of the global soccer market, so that news should bode well for Nike, even if their sponsored teams do end up facing off for World Cup champion. For Nightly Business Report, I'm Sarah Eisen.